Hello there, Maverick Traders. This is Robb Reinhold, and this is the Trading Room. Here we are already with almost 2 months under our belt in 2024. Let's talk about last week. Let's talk about all the news that happened in the market, and then we're going to go ahead and take a look forward to the week ahead. So look, the markets hit new highs on Thursday. We got a pullback early in the week, but really Thursday wiped out the entire pullback and moved us up to all-time highs. And the story of the week was NVIDIA. NVIDIA came out with earnings on Wednesday after the bell, and the market was just absolutely on fire all day on Thursday. In one day, the S&P was up 2%, the NASDAQ was up 3%. So again, that one big day really made the entire week. Other than that, it was actually pretty quiet. Bonds were right around 4.26%. And you can see on the calendar here, we really didn't have a lot of information from the economy. We had low unemployment claims, decent manufacturing numbers, good home sales. Everything is still showing an economy that is stronger than everyone on Wall Street thought. And the Fed has been saying, hey, look, we're not done with fighting inflation, but again, we're probably not cutting rates either. The market had built in rate cuts. Those have pretty much been wiped out. And looking forward, everyone's looking on the horizon saying, hey, this market and this economy is pretty solid at this moment. So that's really why the market has rallied so much, because there was a lot of pessimism, people looking at recession. All of a sudden, now that recession is nowhere on the horizon. Let's take a look at a couple of the trades that Corey shared with you last week. This was Southern Company SO, and it was a bear rally pattern. And you can see that we had a little bit of an up week this week. This has not changed anything on a technical basis. Yes, it was an up week on this short, but you can see here, this upper resistance right around the $68 area. Still looks like it's holding. This is all the way until March 15th. So there's plenty of time for this thing to drip back down. I still think this is a decent short in the utility sector. Next one was Wells Fargo. Wells Fargo, you can see nice little high in type base here. Corey said, I think it's going to move higher, and sure enough, it sure did. Really nice run off this high in type base on Wells Fargo. The financial sector was one of the better sectors last week, and it's definitely at a +3 at the moment. And then this is SNOW. As you can see, last week, this is where it closed, gap down. But you can see really nice comeback on this one. I don't see any reason why this one doesn't keep moving higher. Yes, there is some resistance at 235. It's going to probably take a little bit of time to get through that. But if you have enough time on your trade, I don't see any reason why this one doesn't break out and run to the upside. All right, that covers our trades for last week. Let's take a look at the market. What happened over last week? As I said, we had this one day where the S&P was up 2%. The Qs were up 3%. When we take a look at where things closed for the week, you can see that if you take Thursday out of the equation, the S&P would have been negative. If you take a look at the Qs, it would have been negative. If you take a look at the Russell was down for the week. I talked on Thursday in my end of day video about the difference between the large caps and the small caps, and how this is a fairly narrow rally. And I talked about how you could have made that same argument in November, that it was a narrow rally, and missed all of this. But with that being said, we're not stupid. We're not just blindly following. We are intelligent. We're going to be thinking about this. The market is bullish, but it is getting less bullish as we move higher. And what I mean by that is that the things you look for in a market, some of those things have started to deteriorate. Not as many stocks are participating. Not as many stocks are hitting new all-time highs when the market goes higher. We're seeing a lot of concentration in these AI names. And you can see the Russell had a down week last week. Not everybody is winning in this market, but we cannot ignore the technicals. The technicals have been clear, and they've been clear since November. And you've heard me, you've heard Corey, we've all been on here just basically saying, hey, look, I know you may not feel bullish, but it is a bull market, so get bullish, get bullish. The question is, has anything changed? Has anything changed for that message of it's a bull market? Everything technically is telling us to be long. Get long, get more long. We look at this chart here. Has that changed? No, it's only gotten stronger. We are now breaking out of about a 2-week base here. It's only getting stronger. Let's move over to the Qs. You can see the Qs aren't quite as good. Aren't quite as good here, but still, is there anything in this chart that's telling us to be bearish? Absolutely not. Let's talk about reality, though. We have a market that's moved quite a bit, and usually what happens at the end of these markets, you get these blow-off tops. I know Corey talked about this last week in the trading room. I want to talk about it again. We have to be rational human beings. Not everything goes up all the time up to infinity. There are things that happen. We know that things move in waves. They run up, they pull back, they run up, they base. And then trends change, and we go in downtrends, and we fall down, and we rally higher. Where are we in these waves? The question is, we definitely know we're closer to the top than the bottom than we were a couple weeks ago. At some point, there will be a top. We don't know when that's going to be. There's no way we could possibly guess when that's going to be. All we can do is be alert. Stay bullish, but be alert. This is when you start to look at the market saying, okay, I'm going to be ready to make a change when it comes. I'm going to stay bullish, but I'm starting to understand that we might be near the end of this rally. You cannot go short. You cannot sit out. But what you can do is you can make different trades. And we're going to talk about that. You can just dial down the risk. You don't have to play NVIDIA. You don't have to play Microsoft. You can play really low volatility stuff. Let's talk about bonds. I'm going to draw this line here at 4.5%. I think the market is fine with the bonds here. They were much happier when it was below 4, but the economy kept doing better. I think at 4.5, the market starts to feel a little bit of pain from bond yields. We're not there yet. We're at 4.25. Okay, I just want to draw that line up there to keep everyone in mind. If it starts to get closer to this, I think there's more reason to worry about this bull market. But the rally is still on. It has become more narrow. It is definitely, some of the internals have deteriorated. You still have to be bullish. But that doesn't mean you need to be long calls in NVIDIA. You could be, in a very moderate trade on a very moderate stock. And if the market does have a big pullback, if the market does top out, you're not going to get crushed because you're playing down the risk curve. You're not playing with the things that are likely to get hit if we do fall apart. One of the things I do like about this rally is that it is being very participated around the world. Early on in this rally, it was really just the U.S. and everyone else was still pretty terrible. Now we're getting all of these international markets hitting all-time highs. Basically, it's broadening out the rally around the world. You might actually see the U.S. underperform a little bit for a while as money goes elsewhere because people look at the U.S. say, hey, it's already had its rally. Let's look elsewhere to see where we can get a rally. That is actually a good case for this market holding up. If other overseas markets continue to go higher, very highly likely to see the U.S. market go higher as well. Let's take a look at our calendar for next week. The only thing I see on the calendar that really is going to bring anything as far as price action is we've got this core PCE price index on Thursday. So this is the Fed's favorite indicator for inflation. And you can see it's supposed to tick up a bit to 0.4. 0.4, that's the expectations. We've seen inflation in CPI and PPI pop up a little bit. It would not be a surprise. 0.5, I think this is going to be some problems for the market. So if we get +5 or higher on this index, I think that might be a catalyst for a sell-off, but we'll have to wait and see. We also have manufacturing on Friday. Manufacturing numbers have been getting better. This number is still under 50. I expect it's going to improve just like all the other manufacturing numbers have. It's typically a decent number, giving traders and economists a read on how the economy is doing. The technical score is a +3. period. Don't give me the yeah buts. Yeah, but the Fed's doing this. Yeah, but I don't. Doesn't matter. The technicals are at a +3, so you must be at a net bullish delta in your portfolio. You have to. Does that mean you have to be wildly bullish, swinging for the fences? It does not. And I think it doesn't make much sense anymore as we're getting later in this rally to be doing those kind of trades. I think you want to be playing down the risk curve, looking at other stocks and other sectors outside of the AI stuff. I think there's some really good trades in there. I've got a 0 for this week. We had that big jump, and I think it's got to consolidate it a little bit. I just don't see us really going anywhere with the lack of real news on the horizon. We've just gone through earnings. I think this market is going to take a little bit of a breather here. So let's take a look at the sectors one by one and score them all from a +3 to a -3. The performance for last week, you can see that everything was up. What was up the most? Materials, industrials, financials. What was up the least? Energy. And then everything else was up right around 1%. When you take a look at this, this looks like a broad rally. And look, we did have a broad rally last week. A lot of things participated. But when you take a look at large cap versus small cap, that's where the difference is. So yes, all the large cap healthcare stocks did very well, but the small caps did not. That's really what we're seeing here, is we're seeing money really pour into the large cap names. Take a look at utilities. Utilities last week was a 0, and this week it's a 0. It's pinned between the moving averages. One's going up, one's going down. That is a straight 0 on utilities. Here we have communication services. Communication services had a little dip. It came back down to the 20-period moving average, and it bounced nicely off of it. You can see it's got some resistance up here. This is nothing more than a high base. What do high bases typically do? They typically break out to the upside. So we're still at a +3 on communication services. It probably has to base a little bit longer before it has a breakout. Next up is real estate. Now, real estate last week was at either a 0 or -1. You can see we are right in between these moving averages. Got these two reddish candles here, right at a resistance point. If you're looking for a short out there, again, there's no sectors that are a negative score here. But when you're taking a look at these sectors, utilities is underperforming. Real estate is definitely underperforming. Next up is healthcare. Healthcare was at +3. It is still at a +3. Take a look at the strength of this. Just one day pullback and then big rallies off this. I mean, just really nice price action here. Okay, yeah, it's a little overextended. I would love to see a base or a pullback, but this is a +3. This is a strong sector. We go over to healthcare. Sorry, we're going over to industrials. Industrials, same thing. Very, very strong bounce. Extremely strong bounce and a follow-through on Friday that I really like. I want to take a look at the things that did well on Friday, even after the huge gains on Thursday. That's telling you that the money is still pouring. It wasn't just a one-day short covering event. This is actual money moving into the sector. So industrials look great to me. Financials look great as well. We had this couple week base here. We broke out of it. We pulled back, found the support. It took off. Friday's candle, not as good as industrials. So I do prefer industrials early this week over financials, but still at a +3. No question about it. Here we have consumer. As you can see, your consumer have been consolidating in this area. We broke out. Friday's candle, not great. That being said, technicals are still at a +3. I do like the fact that we do have a 20 crossing over the 50. A lot of times when this happens, you get a little bit of an acceleration of a trend. I like consumer here, but it's not my absolute favorite at the first part of the week. Take a look at tech. Now this is a surprise. This was a surprise to me when I pulled this up. To take a look at when you just strip out the NASDAQ, when you strip out to only tech, all of a sudden you're seeing we didn't make a new all-time high. We did not make it. And Friday's candle is frankly pretty terrible because we gapped higher. People were excited, and then the sellers came in. By the end of the day, there was a lot more sellers in tech than buyers. Look, it's not a 0, it's not a -1, it's a +2. But I do think that technology is showing some relative weakness to the other sectors. What it was a leader, it was an outperformer, it's now become a little bit of an underperformer. So I'm actually going to be taking a look at some neutrals to mildly bearish trades in the technology sector to balance out some of my other bulls in there. Take a look at this. This is what we're looking for. This is what we like to see. Friday continuation. Friday continuation, everything looks good. Yeah, it's wildly overextended. I would love to see a sharp pullback, but if you get that pullback, materials looks really good. We go to energy. What can we say about energy? Technically speaking, it's a +2. It just is. It's a +2. But there's not a whole lot of momentum to it. So we've got some resistance. Got some resistance up here. We are building here. Basing. Okay. You know what? It's okay. If you want to be mildly bullish here, you could. If you want to be neutral here, you could as well. But technically it is +2. We take a look at where we stack them all up. You can see that we don't have anything in the bearish, not one, but real estate and utilities are underperforming. Technology is underperforming the rest of the group. As you can see, everything else is stacked at a +3. Tech and energy. If you are looking for bears, I think tech and energy could give you a decent opportunity to fill those slots because they're just underperforming the rest of the market along with real estate and utilities. So let's take a look at a couple trades here in some of these sectors. First up, let's talk about real estate. Real estate is one of the weaker sectors. It's at a 0. I came across this one. I have never played this stock before. WPC, WP Carry, and it is a bear rally. Now, what I was looking for in the real estate sector was a stock that had a poor showing on Thursday and Friday. A lot of the things in real estate had a nice little bounce that had been weak. But take a look at this one. I mean, this is showing absolutely no strength and weakness. And on Friday, we actually close at the lows. This one has monthly options only and only has $5 strikes. So you will be confined to playing the 55, 60 strikes. I don't think you can say it's going to go any lower than 55 because the next one would be 50. And I think that is wildly, wildly too bearish. So for me, the only trade here, the March 15th, 60-55 bear put spread. It's going to be about a delta of 0.65, most likely. So again, this is going to be a positive theta trade and with a little bit of delta on it. So we just want this thing to close below 55 on the Friday, the third Friday in March. Next up is industrials. Industrials is a sector I really like. I really liked how it closed on Friday. This here is CP, Canadian Pacific. Just a really nice basing pattern. We had a big run up. We had a pullback, came up, consolidation. You can see we have broken out. Now take a look at how we've broken out. We haven't broken out with a ton of energy. We haven't broken out to where it's going to run and just be the greatest thing ever. You can't expect this thing to make a significant move up to 90 or up to 95. That's just not what it looks like at the moment. I think you've got to play this one a little bit less bullish. I like something like this up to the 87.50. If you do want to get more bullish, maybe to the 90. If you want to do a diagonal, it's a 3-week diagonal, which I don't really love to do. You could take a look at this one. I think this is a decent trade. But as you can see here, we want to be mildly bullish here. We're not looking to be, long calls on NVIDIA. We're taking a look at a railroad stock and saying, hey, let's be like a +1, +2 on this trade, just in case this market is tapped out here. And we're going to be just fine playing in these lower volatility names. Right, next up in the consumer sector. The consumer sector was a +3, didn't have a great Friday, but I've been watching this one a little bit. Again, another stock I have never traded before, CELH. When I looked at the ticker symbol, I'm like, oh, I don't know what this is. And I looked at the name Celsius Holding, and I'm thinking, oh yeah, I think this company makes those either seltzers or flavored waters. Anyway, it doesn't matter. They're in the consumer sector, and you can see here, we have a nice little base forming here. I really like this pattern. When things break out, and then they pull back and they hold this level. Now, this is just a really nice confirmation that this was a true breakout because it held the support level. What was resistance became support. I don't know if this stock is going to take off and run. I don't know if it's going to hang out in this area, but what I do know is I do know this 62, 61.50 area is really, really firm support on this. And this stock is likely to go sideways or to move higher. I can make a trade on that. I don't have to be always delta all the time, always bullish. I can do something that's fairly moderate. So I'm looking at a March 8th, 63.65. So again, 63.65. I'm basically saying I think it's going to be above this 65 in 2 weeks. That's a very, very moderate trade. Also, a diagonal call spread makes a lot of sense here. Doing a 62.65. So 3 weeks out and then sell this week's 65. Again, I think this one makes a lot of sense. Remember, you don't have to play it wild. You can still be bullish at the late stages of bull markets and still make some good money. You just have to understand where you are. You don't have to be in NVIDIA. You don't have to be in CAI, like C3AI. You don't have to be in those. You can be in other stuff, and it'll make you sleep better at night, I promise you. Material sector was a +3, but when I really took a look in the material sector, I didn't find anything I loved, but I found a lot of stuff that I loved on the sideways. And so this is Tech Resources, TECK. As you can see here, we've got good resistance up here at the 41 area. We've got really good support down here at the 37 area. The question is, where is your midpoint going to be at expiration? What I mean by that, we're going to put on a butterfly. We have strikes to choose from. We have a 39 to choose from. We have a 41. Remember, you're going to try to pick the strike price that it's most likely to be on your expiration date. So if you're looking just 1 week, then you would really just look at, okay, in 1 week, if I've got a 0 on the market, I've got a +3 on the sector, I would probably go to the 40. I would say, hey, you know what? This is likely to go higher, more higher than lower this week. So I would look at to use 40 as the midpoint. Let's say I was a little bit more bearish. Let's say you are saying, hey, I think there's going to be a pullback this week. And you might go with the 39. So it's really, you're trying to pick where is the midpoint. For me personally, I'm going to go with the 40 as the midpoint. So I'm looking at the March 8th, 2 weeks out, with the 40 strike. So again, we're going to do the 38, 40, 42. This is going to give me right in here is going to be my profit area. Right in here. So that it can just stay where it is or it can move a little higher. I just want it to really be in this profit area on that March 8th. And next in energy, also looking at something a little bit sideways, a little bit bullish here. And I think, again, we want to mirror and match what the sector is doing. We did push through this little resistance here at 23.50. You can see here, we got a lot of overhead resistance up here. Just got a lot of resistance up in these areas. I think it's a great time to throw on a trade and say, yeah, you know what? I think it could drift a little higher. We're back to the same question. Where is your middle point? I'm looking for the March 8th, 24.50 as my middle point. I'm basically saying I think it's going to drift up to this midline here. So this is going to be a fairly targeted butterfly coming to the upside, looking just to be in here in this profit window. I will be making 1 or 2 of these trades in our trading collective group. That's been a very fun little experience here. We were up, we were down, we're back to being up. This is just how trading works. And you're going to see over the weeks, over the months, that as we just plug away, we make our trades, we trust in the math, we trust in the system, that it will build and grow over time. So it's been a very fun thing to watch again, and getting emails from people as things are looking really good, things are looking bad, and then they look good again and then bad. That's just the world of trading, and that's just what happens when you are hyper-focused on P&L and your account balance. If you're just hyper-focused on your trades and you manage those and you do it perfectly, it's a great exercise in the trading collective to really see this firsthand and see what happens when you do rigorously follow a trading system. If there's any trades you want to share with the group, you know where to go. Log into Maverick Trading, go to the members area, go to the forums, and let's all help everyone make more money here. Let's wrap this up. Bullish but cautious. Now, this is one of the jokes, the long-time jokes at Maverick, is whenever you want to say something where you sound smart, but it's the dumbest thing you can say, you say, long-term I'm bullish, but short-term I'm cautious. It is kind of a joke because they have these people on CNBC that have years and years of experience, and this is the chief whatever at Morgan Stanley, and he's been an expert in everything. And what is your call here on the markets? Long-term I'm bullish, short-term cautious. That is the biggest, I'm going to say chicken shit answer that anyone could ever give. Talk about just, that's the worst answer. So we always joke and say when we don't know, it sounds smart to just say, well, long-term I'm bullish, but short-term I'm cautious. And it's just a joke here, but that's kind of what we're saying here. We're bullish, but cautious. And as we said, you still want to be bullish, you still want to be long delta, but you don't need to be playing up the risky curve. They're on the risky side. You can dial that back down and still stay bullish and still participate in the last legs of this bull market. That is it for me. Everyone have a great weekend. Goodbye, everybody.